Welcome to the Maximize Business Value podcast. This podcast is brought to you by Mastery Partners, where our mission is to equip business owners to maximize business value so they can transition their business on their terms. Our mission was born from the lessons we've learned from over 100 business transactions, which fuels our desire to share our experiences and wisdom so you can succeed. Now here's your host, CEO of Mastery Partners, Tom Bronson.
Hi, this is Tom Bronson, and welcome to Maximize Business Value, a podcast for business owners who are passionate about building long-term sustainable value in your business. Look, I've said it a lot. I'll say it again. Every business on the planet will eventually transition. And wouldn't it be better to transition your business by design rather than default? So if you're a business owner who wants to maximize the value of your business and eventually exit, you're in the right place. This episode is part of the series from my latest book, Maximize Business Value 65, the playbook, by the way, 65 specific actions to dramatically increase the value of your business. Today, we're on chapter 6, Simplify Your Corporate and Financial Reporting. Financial reporting should be easy to read and easy to understand, particularly if you share your financials with an outside group like an investor, an advisory board, family, or a potential buyer. If you do share with an outside group, you should simplify the reporting as much as possible. For most businesses, having a one-page P&L is enough. Depending on the complexity of your business, you could have more detailed financials for internal use, and you should always have the ability to drill into the details if needed. In a recent business, our internal P&L was 6 pages long because we decided that as a management team, we needed that much information to make strategic decisions for our company, but we could consolidate it into a simple one-pager for external distribution, which we did when we reported to our board of directors or our bank or any other outside institution. We just wanted the more detail to manage the business, less detail to show to everybody else. Now, depending on your accounting software, it might be just as simple as the click of a button. If you are using QuickBooks, for example, you can collapse your financial statement. Just make sure that you've designed it well enough so that when you collapse it, you've got enough information there. Now, make sure your reporting is simple enough to understand with just enough detail to satisfy the audience. For example, if you don't have one line for income, break your income into the major categories so that someone on the outside can understand its origin. Case in point, list your hardware, software, recurring revenues, those kind of things. Maintenance, if you're doing lawn services, you might list maintenance separately from installations. If you are doing, let's say, if you're doing manufacturing, then you might list your lines by different types of manufacturing that you're doing. Just make sure that you give just enough detail so that the buyer can really understand what it is that your income comes from. So it's crucial to know where your income originates, but you can consolidate your expenses so that your financial statement is just not too long. For example, group your expenses into general administrative, things like that, so that it's just not this long financial statement. The easier your financial statements are to read and quickly understand, the more likely a buyer will be interested in taking a closer look at your business. If your financial statements are long and complicated and they have to ask a lot of questions to understand, they're probably just going to walk away because they don't want to take the time to understand it. It looks like the business hasn't been well run, even if it might be. So this is one of those cases where just cleaning up your financial statement for an outside perspective might be worth the time that you can invest in it. Here are our MBV recommendations, our recommended actions, the Maximize Business Value recommended actions for this chapter. Itemize your income by categories. Make sure that it's clear if you're doing recurring revenue or reoccurring revenue, that those stand out on your financial statement because people will pay more for that. Take a hard look. Number two, take a hard look at your monthly financial statement and consider having an outsider take a look to help you simplify it. And number three, if you'd like a fresh set of eyes to evaluate your financial statement, just send a copy to us here at info@masterypartners.com, and we will be happy to provide you with some third-party outsider input on your financial statements. This is the Maximize Business Value podcast, where we give practical advice to business owners on how to build long-term sustainable value in your business. If this is the first Maximize Business Value podcast you've listened to, there are more than 160 episodes crammed with unbelievable, valuable information. Well, it really is believable, but it's incredibly valuable information just waiting to be downloaded wherever you found this podcast. So go download all of them today. So until next time, I'm Tom Bronson, reminding you, pick one thing, just one thing to dramatically improve the value of your business, and do it today while you maximize business value.
Thank you for tuning into the Maximize Business Value podcast with Tom Bronson. This podcast is brought to you by Mastery Partners, where our mission is to equip business owners to maximize business value so they can transition on their terms. Learn more on how to build long-term sustainable business value and get free value-building tools by visiting our website, www.masterypartners.com. That's master with a Y, masterypartners.com. Check it out.
That was perfect. I wouldn't make any changes on that.